very good morning to you. Happy Monday. Doesn't seem like, a bad handover that we've gotten from the US markets on the Friday.
Absolutely.
But I believe the Red Sea issues and the tension, that surely is continuing. But overall, how was the close on Friday or the weekly close? How did that look like?
Absolutely. It was quite interesting because you've seen a lot of volatility. And when you look at the Dow Jones, that slipped on Friday as traders really passed through the first batch of fourth quarter earnings and digested the second in a pair of closely watched inflation reports that particular week. So when you look at the Dow, that lost about 0.3%. And then when you look at the S&P 500 also, that ended the day 0.1% higher. Tech-heavy Nasdaq also closed just above flat. So in terms of all of the indices, you've seen those levels, but in terms of weekly gains, those are the more important ones that we'll be touching on a little bit later. But when you look at United Health, that was a key drag on the Dow, and the stock nearly lost 3.4%. Meanwhile, there were a slew of banks that reported their earnings, like I mentioned. More on that later through the show as well, but definitely something that was in focus, Winnie. And investors got some encouraging news on the inflation front as well, with wholesale prices unexpectedly declining by about 0.1% in December. The data follows the more widely followed consumer prices data that we got, which came in modestly hotter than economists had forecasted, with prices up 0.3% on the month. And when you look at it on a yearly basis, 3.4% uptick coming in for that particular data set. On the week, when you look at the averages, all of them notched gains. So when you look at the Dow, that added about 0.3%. When you look at the S&P 500, added about 1.8% as well. And Nasdaq was the outperformer, rising about 3%, Winnie. So in terms of the weekly action, we've seen a lot happening in that particular market.
Absolutely, we're keeping an eye out on that. Let's keep an eye out on finally how the Indian markets open today as well. But, putting the spotlight now on Brent crude oil prices and crude oil prices. So, yes, what we're seeing in terms of the oil prices this morning have remained quite subdued. Actually, Brent crude oil is down 0.4% in trade as of now as well. And mainly, obviously, what's spiking the issue is the Red Sea issue. So, what we are seeing this morning, the Brent crude oil is at $77.9, so around that $78 per barrel mark. And actually, oil prices during the week, the weekend from Friday to now actually saw a sharp fall coming in because of the Red Sea issues as well. So yes, oil prices, they rose and now they've seen a bit of a subduedness coming in. Keeping an eye out on that. They obviously, in terms of issues that have come in from the Red Sea issue, what the US President Joe Biden actually highlighted that in terms of some targeted strikes are a clear message from the United States and their partners that they will not tolerate any of the attacks on personnel or allow from the world's most critical path and commercial routes. So yes, that's a concern, and those tensions are increasing. So because of that, obviously Brent crude oil price is a bit volatile, is what we could say, coming in for the US markets. Let's move on, and also in terms of talk about the gold prices as well. Gold actually saw a rally coming in because of these tensions, and gold prices are at $2,050 per ounce mark. Middle East tensions, Red Sea issues, safe haven commodities, what the gold is, and that is why a rally coming in the gold prices this morning as well. 20,052 is what the gold prices are at. So Shreyanshi, obviously pretty rounded handover that we're seeing coming in. Brent crude oil subdued because of these tensions. Gold, safe haven commodity, seeing an increase. So that's how the check is looking like in terms of obviously the handover from the commodities market that we're seeing coming in as well.
Absolutely, but the big event that we'll be eyeing over the next 5 days, the 54th Annual World Economic Forum in local Swiss Alpine School in the center of Davos. The conference largely centered around rebuilding trust, bringing together 100 governments, more than 100 global companies, more than 2,800 leaders from across the world will be participating in discussions over the next 5 days. Now, what's on the agenda for the week-long conference? Destabilize geopolitical conditions to AI-generated fake news, deepfakes, and lots more, Winnie.
Absolutely, lots more on that front, but also let's look at some of these other updates that have come in this morning as well, and shifting focus to earnings. You touched upon a bit of them. Now, JP Morgan Chase actually reported the best ever annual profit and although a $2.9 billion fee to the government on account of the fallout of the regional banks last year weighed on the overall profits. Now, meanwhile, when you look at it, the CEO of JP Morgan, that's Jamie Dimon, actually reiterated his view on the US economy and stating that it was steady but warned that inflation could be more persistent than expected and rates higher for a longer time.
And staying with earnings, then, lofty one-time regulatory charges weighed on Bank of America's Q4 results, a 50% fall in the net income figure on an annualized basis. Just like JP Morgan, BofA too took a $2.1 billion hit in fees charged on account of the Silicon Valley and Signature Bank fallout from last year. Wells Fargo, however, reported a positive Q4 report, several one-time costs factored into the quarter gone by. However, bank warns of a cautious outlook with a possible reduction in net interest income.
Let's move on. And Citigroup has announced 10% cut to its workforce, and this is amid efforts to boost the lender's earnings and stock. The 10% cut will amount to around 20,000 employees who will be let go over the medium term. Remember, the group had earlier announced the quantum in job cuts at the end of last year.
And on to some other news and updates. Taiwanese voters elect William Lai as their president in a historic election, winning an unprecedented third consecutive presidential term for his party, move angering Beijing, which issued a statement soon after insisting that Taiwan is part of China. While Beijing has called for peaceful reunification, it has also not ruled out the use of force.
Let's move on. And Goldman Sachs forecasts that India's affluent class will reach 100 million by 2027. And the brokerage firm is bullish on leisure, jewelry, out-of-home food, healthcare and premium brand segment. They have classified top 4% of other working age population with per capita income exceeding $10,000 annually. Affluent India, indeed.
And ahead of the Grand Ram Temple inauguration, Ayodhya is witnessing heightened interest from across the globe. Travel portal Make My Trip has recorded a 97% growth in searches for spiritual destinations. What is contributing to this surge, and which are the countries that are contributing the most to this? ET Now's Sumita Kare joins in with this report.
Ahead of the Grand Ram Temple inauguration in Ayodhya on January 22nd, there's a lot of buzz as far as spiritual tourism is concerned. So Make My Trip has revealed some figures. According to Make My Trip, it has recorded a 97% growth in searches for spiritual destinations on its platform in the past 2 years. So which are really the most searched platforms on Make My Trip? Well, Ayodhya tops the list, no surprises for guessing. 585% of searches went to Ayodhya, followed by Ujjain at 359%. Then there's Badrinath at 343%, Amarnath at 329%, followed by Kedarnath at 322%. There's some others on the list as well, including Mathura, Shirdi, Haridwar, Bodh Gaya, and some others. In fact, searches from India increased by 1,806% as far as Ayodhya was concerned, and ever since the inauguration announcement was really made. In fact, the peak search for Ayodhya was recorded on December 30th, which is also the day of airport inauguration. So there's heightened interest in Ayodhya, not just nationally but globally as well. In fact, most number of searches really coming in from the United States. So 22.5% of all the searches are coming in from US, then 22.2% of searches coming in from Gulf countries, 9.3% searches from Canada. The searches also from Nepal, Australia as well. So infrastructure development really leading to a boom, and there's lots of interest in these temple towns, especially in the post-COVID period. And in fact, according to some data from the Ministry of Tourism really earned 1,34,543 crores in 2022 as compared to 65,070 crores in 2021. So data really indicating this demand for spiritual tourism is not just restricted to pilgrimage tourism. It's also a combination of non-temporal breaks, which includes unique experiences and outdoor adventure. So this is one space that we will definitely be watching out for.
Thank you so much for that, Savita. But let's move on and let's get stock on the Navi Mumbai International Airport, as a Civil Aviation Minister Jyotiraditya Scindia actually said that Navi Mumbai. Let's go across to my colleague Aishwarya Patil, who's gotten us a ground report on the progress of the airport and where it's headed. Listen in.
Spread across 2,800 acres of land, 55 to 60% of the civil work of the Navi Mumbai International Airport has been completed. So far, I'm currently on the runway that is still a work in progress. 3,700 meters is what the length of this particular runway is, and of that, 2,000 meters of work has been completed. Now, if we talk about the first commercial flight, when will that take off is something all of us want to know. And we've got to know that March 31st, 2025 will be the day that Navi Mumbai International Airport will fly its first airline. Now, during the phase 1, the passenger handling capacity will be about 2 crores annually, and the cargo capacity will be about 0.8 million tons. Going forward into the final phase, the passenger handling capacity of the Navi Mumbai International Airport will be 9 crores, and the per day airline or flight handling capacity, as we've been told, for this particular runway is about, for a single runway, is about 400 plus flights, and eventually that can be that capacity can be expanded to over 650 flights per day. Now, which airlines have partnered with NMIL, that's still yet to be declared and to be cleared. Going forward, we'll see what is the action on ground here in Mumbai. This is Aishwarya for ET Now.
Thanks, Ashwarya, for that roundup. But German car maker BMW India will roll out 19 models, including cars and two-wheelers, in the Indian market this year. And that's the word coming in from Vikram Pava, President BMW Group India. Listen in.
We'll continue with our model offensive very clearly. I think we showed that we could launch 23 products across cars and bikes in 2023. We are going to launch 19 products across cars and bikes in the year 2024. So some of them include some very big launches towards second part of this year. And I think that will continue to excite the market. But more importantly also, we'll have full year availability of all the products that we have launched in 2023. So all those waiting customers can now take a sigh of relief that we are ramping up supplies, and all those products will be available soon.
Okay, that was all the update that we had. Important update actually on the domestic as well as global front. But we're going to slip into a very short break, viewers, because after the break, we'll be taking more domestic updates, more stock-specific updates that are important for you all in trade today. Welcome back, and you're watching Market Cafe on ET Now. As of now, the Nifty implied open is 0.3% uptick that we're seeing. So yeah, let's keep an eye out on how our Indian markets actually open in trade. But a lot of earnings that came in Friday post-market hours, as well as in terms of over the weekend as well. So let's talk about the two IT companies, because IT was the flavor on Friday and seems like it's going to continue today as well, because HCL Tech reported a good set of numbers, better than what the street was expecting in Q3. Yes, FY24 guidance on the top end, they've slightly trimmed that a bit. So 5 to 5.5% is in CC terms now the guidance for FY24. Earlier it was 5 to 6%. So on the upper end is what they've cut it, because 5% is still there. 5.5% instead of 6% is what they're saying. So yes, keeping an eye out on that. EBITDA margin guidance for HCL Tech is at around $1.9 billion, slightly lower than what we were expecting as well. But other than that, attrition rate, that's down 12.8%. Headcount has increased by 1.6% on a quarter-on-quarter basis. So let's keep an eye out on HCL Tech's number. And good show that came in on that front as well. Wipro also, yes, that's also did quite well in trade overall. When you look at Wipro's numbers, the positives, the pros are more than in terms of the cons that came in as well. So yes, surely that's a factor that one should keep an eye out on. And other than that, you know, when you're looking at Wipro ADR also, that jumped up after the numbers came in as well. So yes, interesting there, because overall in terms of CC decline, that was at 1.7% versus expectation of 2.7%. Revenue decline at 2.1% versus dollar revenue decline is what I'm talking about. eased at 2.1% versus 3% as well, and deal win was strong at $3.8 billion. Q4 guidance at negative 1.5% to positive 0.5% versus expectation of -1 to positive 1 was the expectation. Revenue and rupee revenue are slight miss, but all in all, the positives are weighing more than the negatives. But listen in to both the managements in terms of the press conference. What were the highlights they were giving in?
Discretionary spending has really not picked up. It remains at similar levels like what we saw in the previous quarter. But however, having said that, there are always some bright spots where the spend is resilient, like cybersecurity is an area, SAP migration is an area, data. Now, a lot of customers are embarking on Gen AI programs, but it also means they need to significantly transform and evolve their data landscapes. So that is again a big opportunity area, and we see some opportunities in that space. So while the overall discretionary spend environment would be similar, there are some pockets where we believe there is strength, and we are focusing on that. And then the biggest opportunity continues to be hyper automation, delivering hyper automation, efficiency, productivity benefits to clients. And that's a big theme which is continuing to play out in vendor consolidation and cost takeout opportunities.
You know, there is typically January and February are very important. I'd say that that probably the worst is more behind than ahead.
You know, every quarter has its puts and takes. If you look at Q4, we're still not back to growth. Our guidance is negative 1.5% to a positive 0.5%. It is an improving revenue environment. Secondly, we will have 2 incremental months of salary increases that we will have to absorb. But that said, we've taken several initiatives, and some of that will continue to give us benefits in Q4. So that's why we feel that our margins will be in a narrow band.
These are certain contractual obligations all of us have as an employer and as an employee, which we need to make sure we adhere to, and we are trying to ensure that those are met. That's all. We have no issue against any individual, any leader wanting to have any career aspirations joining anywhere. So it's not anything personal. It's an industry practice which we want to ensure that going forward, like any employee would do it, an employer would request for people to have obligations being met as per contract.
Well, that's the word coming in from the managements at Wipro and HCL Tech then. But moving away from earnings, the major players in the cement sector seem to be getting bigger with several M&As over the past few years. And the trend is also expected to continue according to experts. Somit joins in with the details of the likely targets of acquisitions. Somit?
Well, if you see, cement sector will continue to remain in focus given the fact that there has been not only because of price and demand moves, but also owing to the consolidation that we have been seeing in the sector. Now, in 2022 and 2023, if you see, there have been 5 such acquisitions which have led to consolidation in the space, and going forward, as per them, over the medium term, nearly 64 to 60 of the industry capacity. Now, the 10 acquisitions that could happen over the medium term, as per the report, is on the back of multiple issues like balance sheet constraints, promoter-related succession issues, and could also be an MNC which is looking to exit if offered a lucrative valuation. Now, of these 10 companies, nearly 3 of them are unlisted, while the 7 companies are in the listed space. Now, among the companies that could face balance sheet constraint, Vadraj and Penna Cement are among the unlisted players which could be a potential target owing to balance sheet constraint. Then there is Mangalam Cement, Orient Cement, India Cement, Saurashtra Cement, which could face potential issues related to promoter-related succession and hence could be a potential acquisition target. And lastly, there are multinational companies like Zuari Cement, Heidelberg, Sri Digvijay Cement with professional management, and these companies could see a promoter exit if lucrative valuations are offered by the acquirer. And do remember, in the last 16 M&A deals that we have seen in the cement space, nearly 14 of them have been triggered owing to balance sheet constraints. So keep an eye out for these cement companies and the cement sector in space, because consolidation could be the key trigger for valuations going forward for the cement sector.
Okay, so Amit, thank you so much for that. And that's going to be DMart or Avenue Supermart as we know it. They reported their numbers on Saturday. We have a fair idea of what to expect before because the operational update that comes in. Now, obviously, revenue a 17.2% growth over there. Obviously, profit seeing a growth of around 15% as well. And margins slightly in line with what we were expecting as well, 8.46% versus 8.62%. Mainly the pressure on the margins in the last few quarters or last year was because of the general merchandise as well as the apparel business, which is a high margin business. The mix over there is a bit skewed, but this time the management commentary coming in, yes, this time it was a bit skewed, but seems like this is finally stabilizing in terms of the contribution that we see from this segment as well, and trends were encouraging post Diwali. So yes, that's something interesting to watch out for. Store base addition, that's still under pressure as well because they've added 5 stores during the quarter. Total stores now stand at 342 because they added during the quarter they've added 5, but yesterday they came in with an announcement that they've added one more store that is in Nagpur as well. So now the total store count stands at 342. Festive season, what the management highlighted that higher margin business was still softer. Worst seems to be over in terms of that mix. Pre-store revenue growth for quarter 3 that was healthy at 5% as well, and store addition, like I mentioned, was a bit subdued, nothing exciting below what the street was expecting. Though store expansion is now underway, analysts are saying that they are focusing on the under-penetrated states, and that's something that will be supporting them. Now, what brokerages are saying, Jefferies is maintaining and hold target price of 4,200 rupees per share, while Morgan Stanley is maintaining an overweight target price of 4,471 rupees per share. So keeping an eye out on Avenue Supermart today.
Absolutely, keeping an eye on that particular counter. But moving on, India's December retail inflation increased to 5.69%, driven by rising food costs, particularly elevated vegetable prices, and also household staples as well. Despite this particular uptick that we're seeing, it remains within the Reserve Bank of India's target range of 2 to 6% for the 4th consecutive month. Core inflation, on the other hand, when you look at it, came in at about 4.1% for December. Let's also listen into the view coming in from the experts, Madhavi Arora, lead economist at MK Global Financial Services, as well as Indraneel Pan, who's the chief economist at Yes Bank. Listen in.
This budget, of course, we are not really expecting any major policy announcements to happen. And I think the finance minister also had been clearly pointing out that this is likely to be a vote on account budget, which will tide over the revenues and the expenditures of the government for the next 3 to 4 months before the new government is in place. But having said that, I also do believe that there is or likely to be a serious intent from the finance ministry and the government of India to provide for a consolidation. Much important because we are getting added to the bond index and macros are something that will be very crucially dissected in terms of how we actually look at the scenario.
Last 3-4 years, what you've seen is that capex growth has been steadily growing at around 30% or so. I think the coming year would see capex growth at least sort of stabilizing more toward 15-20% or even lesser. While revenue expenditure growth probably will see a much higher, print, partly on account of the fact that we have also sort of a base effect that we will have with regard to the revenue expenditure. But that said, overall, I don't think the policy push would be materially consumption oriented.
Okay, on that note, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more stock action after the break.
Welcome back. Thank you so much for staying tuned in. Let's take a look at some of the mid-cap earnings then from Q3. You've got Anand Rathi Wealth that delivered an inline set of numbers. When you look at Just Dial as well as Aditya Birla Money, they were above estimates. Sharad is standing by with an update on all of those counters as well.
Well, yes, in the mid-cap earnings space, at first we are having Anand Rathi Private Wealth, largely inline set of numbers coming in. But if you look at the revenue and PAT, both of them have gone up more than 30% on a year-on-year basis. Interestingly, AUM has seen a strong jump, jumping up almost 43% on a year-on-year basis. And the equity mutual fund net flows also, that has also gone up by almost 5 times. Other important operational parameters have also stood strong. Apart from this, the second stock which would be in focus would be Just Dial, above estimates number coming in, revenue jumping up almost 20% on a year-on-year basis, but the margins that has gone up from almost 12.3% jumping to almost 23%. Importantly, if you look at the quarterly unique, while PAT has jumped almost 74%. Importantly, the broking segment revenue has been an outperformer for the company, and that's why the numbers have come above estimates.
Okay, Sharad, thank you so much for that update. But let's move on and look at the other stocks that are in focus today on the back of news flow. Ashesha is bringing us the list. Ashesha, good morning.
Well, yes, first up, let's talk about BHEL, where the company has received orders from NLC. This is to the tune of 15,000 crores for supply of equipments. So, big order inflow that has come through, because of which BHEL will be in focus today. Meanwhile, let's also talk about two counters which will be in focus on the back of fundraising via QIP. First up, eMudra, which will be raising about 200 crores via QIP, and the floor price of the same has been fixed at 443 rupees per share. Good Luck India, meanwhile, has also launched a 200 crore QIP, and the floor price of this has been fixed at 989 rupees per share. Let's also talk about All Cargo Logistics. This one has come out with operational data for the month of December, where total volumes for the month of December have risen by about 7% on a year-on-year basis and 6% on the month-on-month basis. And over here, management commentary is quite positive. They expect the momentum to go on from here on. They say that they are confident that their continued efforts will improve wallet share and grow new businesses, will help the volume momentum going from here on. So the update is also quite strong, and the management commentary is also quite strong, because of which All Cargo Gati will be in focus today. Meanwhile, three counters will be considering fundraising on the 17th of January, DB Realty, Som Distilleries and India Bulls Housing Finance, so keep an eye out on this counter as well. Lastly, Aditya Birla Money, the counter will be in focus on the back of their results.
Yes, Yesha, thank you so much for an update on those counters. But another counter that will remain in the spotlight is HDFC Life. After weaker than expected VNB growth as well as lower guidance for financial year 24, brokerages are also not so optimistic about HDFC Life. Gaurav joins in with the key highlights of their notes as well.
Right. So first, let's talk about the API and VNB margins. The API and VNB growth was almost at 5%, which was actually lower than what the brokerages were expecting. If we talk about the VNB margins, they stayed at 26.5%. It was actually in line with what the street was expecting from the company. Asset under management grew by 20%, and the company also highlighted that they have seen fast-paced growth in the tier 2 and tier 3 cities, in the likes of 2x the company's growth. But overall, they have revised their growth target to 11 to 12% in FY24 versus what it was at 15%. And on the back of this, we have seen Macquarie maintaining its neutral rating and a target price of 635 rupees. They believe that the VNB growth was actually lower than estimated, and that is why the neutral rating is not changed. And next we have is BofA, where they have maintained the buy rating but cut the target price to 735 rupees. Now they have also moderated the FY24, FY26 earnings growth forecast by 7 to 9%, but they believe that the implementation by the IRDAI IRDAI circular is limited on the company's growth and margin outlook, and they believe that there are multiple growth drivers for the company, but overall they have also cut the target price to 735 rupees per share. And we have also seen that the stock was down almost by 1% after the results, so it will be really interesting to see.
Surely keeping an eye out on HDFC Life. But let's move on and look at some of these important news flows coming in this morning. And Maldives President Mohamed Muizzu asked India to formally withdraw troops from the island nation and has set a March 15th deadline for the same. Now, what he's furthermore saying is that they made the demand as high-level core group set up by the two countries to address the issue held in its first meeting in Malé. Let's move on. And day 2 of the Congress Bharat Chodo Naya Yatra is the public is addressing the public in Manipur, where had Kang Pokpi scheduled today. Now the Congress has launched a scathing attack on the Prime Minister and the BJP, saying that they do not seem to consider Manipur as a part of the country.
And winter gets colder as dense fog covers North India. Temperatures dropped to 5 degrees in Delhi this morning. Winter vacations in schools extended in many states. Holidays in Haryana till January 18th up to class 3. Punjab schools up to class 5 to remain closed till January 21st. Delhi changes school timings as well. And India beat Afghanistan by 6 wickets in the second T20 match in Indore. Young guns Yashasvi Jaiswal as well as Shivam Dubey start with the bat as the men in blue now take as an undefeatable 2-0 lead in the 3-match series as well.
Okay, and with that, we're absolutely out of time on this edition of Market Cafe. It's a goodbye from Shriyansi, myself, as well as the team who put this show together. Don't go anywhere. The markets will take the action forward.